A bullish order block is only as meaningful as the structure that creates it. Today we read one born from the pullback, right after an upside break of structure, defended twice, then launched on volume into a new high. The lesson isn't just that the zone held, it's where the zone came from, the first demand zone of a newly confirmed uptrend. The chart opens in a downtrend, the lower high, lower low ladder, stepping price lower. But the decline is losing force. The legs get shorter, the lows come closer together, the selling thins. This is a trend running out of participants, not accelerating. By the lows, the character has shifted from trending to basing. Nothing has confirmed a reversal yet, but the conditions are assembling. At the lows, price stops making new lows and begins to coil. The candles overlap, the range compresses, the volume stays muted. This is accumulation in its plainest form. The downtrend's momentum spent, but no new trend begun. A base on its own proves nothing, plenty break back down. It only earns the name launchpad in hindsight, once structure breaks. Out of the base, price rallies with intent and pushes to a higher high, the first after a long run of lower highs. A single higher high doesn't end a downtrend, but it's the first crack in the bearish structure, the market refusing to make another lower high. This rally is the move that will, a few candles later, break structure, and the high it prints is the level that break is defined against. Price takes out the prior swing high, the break of structure. This is the confirmation the base was waiting for. Where a higher high merely hinted, the break commits. The market has now made a higher high and a higher low, the grammar of an uptrend. This is the pivot of the chart before it a downtrend exhausting, after a new uptrend establishing. And the break is what gives the next phase, the order block, its meaning. After the break, price doesn't run straight up, it pulls back, and that pullback is where the bullish order block forms, the green band. It's where the last sellers were absorbed before the uptrend resumed, the footprint of the move that confirmed the trend. This is the origin that distinguishes this read. The zone isn't interesting for where it sits, but for when it formed immediately after structure broke. That timing is what makes it credible. Price returns to the order block for the first time, tagging the upper edge of the green band. The higher low label on the zone tells the story, the pullback holding above the prior swing low, keeping the uptrend intact. The zone does its job, price touches it and turns back up. But a single hold is encouraging, not conclusive. Plenty hold once and fail next time. The first tap establishes there's demand here, not yet whether it's durable. Price comes back to the order block a second time, tagging the band again, the second higher low on the zone, and again it holds. This separates the chart from an ordinary single retest. The zone is tested twice and defended both times. Repeated defense is structurally different from a single hold. A zone that turns price away once might be coincidence. Twice at the same level shows the demand there is real and persistent. Taken together, the two taps confirm the order block in a way neither could alone. Tested twice, held twice, both times printing a higher low that keeps the uptrend intact. The level the pullback created has proven itself as the demand floor. This is where the origin pays off. Because the block formed right after the break, its repeated defense isn't just a level holding, it's the new uptrend defending its first line of demand, twice before continuing. From a second defense, price launches into a markup, and a volume confirms it. The tall volume bar beneath the advance is the heaviest participation in that part of the chart. Genuine demand stepping in rather than a drift on thin activity. After two quiet defenses, the the breakout arrives with conviction. This is the leg the whole structure was building toward: base, break, block, two defenses, all preparation, and a volume back markup is the payoff. The markup carries price to a clear new higher high, well above the break level and the order block. The uptrend that the base set up, the break confirmed, and the zone defended has delivered its leg. After the high, price pulls back to a lower high and chops near the top, the markup maturing into balance, just as the downtrend matured into a base. The bullish half is complete: exhaustion, break, order block, defense, markup, new high. 3 things to carry from this chart. An order block's origin is what gives it meaning. A block formed from the pullback right after a break of structure is the first demand zone of a new trend, not a random level. Repeated defense is stronger than a single hold. A zone that turns price away twice, both times a higher low, has shown the demand is durable. And the volume on the breakout separates the real move from the oscillation. The defenses were quiet. The markup arrived on the heaviest bar. That contrast is the tell. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.